Good morning, class. This is your professor, Sir Dan. Okay, and we will continue our lesson for today. Let us have our words of wisdom first, as usual. So for today, we have a very nice one. Smile, it will make you look better. Pray, it will keep you strong. And love, it will make you enjoy life. So very easy thing to do. Napakadali. Smile, pray, and love, but it will provide you great and wonderful benefits. Okay, now let's say benefit, but a good way of living life. Okay, let us start with our lesson. The topic is this is the continuation of our processing transactions of a merchandising business. And we are already on part two, and this part two is inventory systems. Okay, class, the topic learning outcomes on inventory systems of merchandising business. Students can differentiate the two methods of inventory systems, the periodic method and perpetual. There are two inventory systems, periodic method and perpetual. We will differentiate these methods. Okay, we will determine the cost of inventory, and we will discuss the journal entries related to the two methods of inventory system. Okay, and actually the bulk of the discussion for this lesson is the illustration of the differences of perpetual and periodic methods through journal entries, its effects on the accounting equation, and on the financial statements. Okay, inventory cost. In merchandising business, we determine the inventory cost or the product cost. Inventory cost is the product cost by calculating how much it costs to buy the product. Magkano ba natin binili yung product na ibibenta natin? That is the product cost. And the question is, what is the composition of the inventory cost? Ano-ano ba yung mga cost na dapat nating i-consider in determining the product cost? Of course, the price of the product. Magkano natin binili yung product? Yeah. But we have to provide a reduction. Ibabawas natin yung discounts. May discount ba? Let's deduct that. We will have to add the shipping cost. And in accounting, shipping cost is what you call, in buying the product, is what you call freight in. Okay? And we have to add the insurance, handling, and any other cost related to the buying of the product. So basically, inventory cost, the composition will be the price of the product less discounts, add shipping cost or freight in, and insurance and handling. Okay, the inventory costs actually depends on the method of inventory system used by the business. So, ano ba yung inventory system na ginagamit ng business? Okay? Doon natin malalaman kung the proper way of computing inventory cost. So the question now is, what is the applicable method of inventory system for the merchandising business? Anong method ang dapat nating gamitin? Okay? So the method that we have to use is dependent on the nature of the product being sold by the business. So ang method na gagamitin is dependent on the nature of the product. Okay, so the methods of inventory system. If we are a merchandising business, engage in high-priced, low-volume products or goods, okay? Ano itong mga examples na to? Okay, the examples are cars, jewelries, houses. So if we are in this business, okay, if this is our product, okay, we will use what you call the perpetual method of inventory system. Okay, so perpetual method, high price, low volume. Okay, so if we are a business, a merchandising business, engaged in low priced, high volume. Okay, sa perpetual, high price. Dito sa kabila, low price. This low volume, high volume. So if we are engage in low price and high volume products. An example natin dito are grocery stores, bookstore, department stores, sporting goods, appliance stores, and basically lahat ng mga trading na maliliit ang presyo ng mga product na ibinibenta nila at maramihang mga items, okay? And the inventory system that this business should use is periodic method, okay? So periodic method for low priced, high volume, okay? Perpetual method, high priced, low volume, okay? Now let us illustrate the journal entries on these two inventory systems. Okay, on purchase of inventory, perpetual method, basta bumili ng inventory, it uses the inventory account. Okay? It uses the inventory account. So when you purchase an inventory, you debit the inventory and then credit cash or accounts payable. And on periodic method, it uses the account purchases. So basta bumili ng mga items na ibebenta, the entry is debit purchases, credit, cash, or accounts payable. Okay, so yan yung difference. Basta perpetual method, debit inventory. Basta periodic method, debit purchases on the purchase of the inventory. Okay? So, for sales transactions, ano ang entry? For perpetual method, debit cash, credit accounts receivable, debit cash, debit accounts receivable, kung ano man, if we receive cash, we debit cash. If we receive a promise, we debit accounts receivable. And credit sales, okay? And on periodic, it's the same. If we have sold an item and we receive cash, we debit cash. And if we receive a promise, we debit accounts receivable and credit sales. So basically, what we are trying to say here is that on sales transactions, there is no difference between perpetual method and periodic method. Okay. Let's move on. Let's continue the discussion on the illustration of journal entries. Now, on recording the cost of inventory sold, this is very important, class. On recording the cost of inventory sold, because we have sold the inventory, and then the cost of inventory is also termed as cost of goods sold. Remember this, class. The cost of inventory is termed as cost of goods sold or cost of sales. They are synonymous. But in our illustration purposes, we will probably be using more of cost of goods sold. Okay? So cost of goods sold. So class, under perpetual method, okay, we have to immediately record the cost of goods sold. Class, record the cost of goods sold. So we will debit the cost of goods sold and we will remove the inventory because we have sold it already. So we will credit inventory. We will have illustration later which will provide you a better understanding of this. Okay, for periodic method, okay, there is no entry for cost of goods sold at the time of sales. Ang ibig sabihin, basta nagbenta ka lang na nagbenta, hindi ka nagre-record ng iyong cost of goods sold. Hindi ka mukha ng perpetual, wherein pagkabenta mo, if you have sales, okay, you debit cash and credit sales. Pagkabenta mo agad, then you have to record immediately your cost of goods sold because kukonti lang siya. So alam mong madali mo siyang matrace sa yung record kung magkano talaga ang goods sold, cost of goods sold mo. In periodic, because you are selling several items and high volume, okay, maaring nasa million of items ito, okay, sa supermarket, okay? Imagine how many items, different brands, different products, different brands, different sizes, so several items. Okay, at the time of sales, there is no entry for cost of goods sold at the time of sales. So ano mangyayari sa cost of goods sold? Cost of goods sold will be determined at the end of the reporting period. Class, determined, hindi recorded. Okay? In perpetual, we have already recorded the cost of goods sold. But under periodic method, we will determine the cost of goods sold at the end of the reporting period. When we say end of reporting period, we mean if we are our accounting period or reporting period is calendar year, so the end is December 31st and on that particular year. The most important thing under periodic method is conducting a physical inventory. At the end of the reporting period, inventory count will be conducted to determine how many that were not sold. Ilan ang natira, ilan ang nandoon, okay, na pwede pa nating ibenta. Okay? So we have to know that. Okay? So now we will discuss how to determine the cost of goods sold in periodic method. Okay? Paano natin malalaman ang ating cost of goods sold? The first thing is that we have to conduct physical inventory at the end of reporting period. The physical inventory will give us a list of unsold items. Okay, ito mga unsold items, kino-cost yan. Okay, so the total cost will be your inventory end. Okay, so again, I just want to emphasize that the account cost of goods sold is not recorded under periodic. Hindi natin ginagamit itong as one of our accounts, okay, in our record. The cost of goods sold is determined and calculated. We are determining the cost of goods sold under periodic method. Okay, let's have the illustration. Okay, what we have in the record under periodic method is our purchases, assuming that we have 10,000 purchases. Okay, for year one, we are just starting the operation, so year one. So now we will conduct an inventory, okay, of what was left, okay. So after conducting the inventory, we found out that we have 3,000 amount of goods that were left unsold, okay. So purchases minus what was left will be our cost of goods sold, okay. For year two, for example, on our second year, this inventory end, okay, these items that were not sold in year one will be your inventory that will be available in the beginning to be sold. Okay, yan ang pwede pa nating ibenta. Okay, and we will of course have purchases for the current year, year two, and this inventory beginning plus purchases, okay, if we will add this is what you call the merchandise available for sale. This is the merchandise available for sale for
It's 8
year
o'clock.
two, okay? And then we will conduct an inventory again, okay, at the end of the year to compute the cost of goods sold for year two. Suppose that on year two, the inventory end is 5,000, so our cost of goods sold is 15,000 minus 5,000, our cost of goods sold is 10,000. Okay, now let's go to the presentation of income statements. On perpetual method, we have sales, less cost of goods sold, will give you your gross profit, less expenses, will give you your net income or loss. Okay, let's put an absolute amount. Sales is 20,000, and because the cost of goods sold account is used in recording the items that were sold under perpetual method, so it is available in your record. So we can plug in whatever cost of goods sold that you have in your record. So sales less cost of goods sold will give you your gross profit. Less the expenses will give you your net income or loss. So here, class, sales is in your record, and then cost of goods sold, it's also recorded. So deducting cost of goods sold from sales will give you your gross profit. Less expenses will give you your net income or loss. In this case, it's a net income. Under periodic method, you have sales. Let's put an absolute amount, 775. Let's actually this would be in 100,000. So let's just simplify this. Okay, sales 775, and then less cost of goods sold. We cannot put certain amount on cost of goods sold because it's not available in the record. We have to determine it. So in determining cost of goods sold, we have to have our purchases. But for considering that we are already on a second year, we will have an inventory beginning. Okay, what was left from last year? So we will use this that we are already on our second year of operations. So inventory beginning, if we have 150, then we will have to add our purchases. And if our purchases for the current year is 720, then adding these two will give us our merchandise available for sale, which is 870. Okay, merchandise available for sale is the total amount of merchandise that you can sell for the year. And then you will conduct an inventory and at the end of the year. And if you have 200, so 870 minus 200, that will give you what? That will be your cost of goods sold, correct? So sales less cost of goods sold of 670 will give you your gross profit. Okay, less expenses will give you your net income or loss. Okay, let's go back. I need to emphasize on certain things. Okay, so class, here, cost of goods sold is available under perpetual method. Under periodic method, cost of goods sold is not available. We have to compute it based on the accounts that we have. We have the purchases, right? That is recorded. 150, the inventory beginning, that was from last year's record. And the inventory, and this is the inventory that we have conducted for the current year. Okay, always remember this class. Sales less cost of goods sold. Okay, so you have to compute first or determine your cost of goods sold, and whatever was computed you have to deduct it from sales. How it's presented, class? So here you have sales because you are deducting cost of goods sold, so it will be presented as a reduction here, and then gross profit less expenses will be your net income or loss. Okay, class? So basically, if you will note, that's why in our uh, part one of the lesson, it's I have shown you that sales less cost of goods sold equals gross profit less expense equals net loss, which is the same thing. Sales less cost of goods sold less gross profit less expenses equals net income or loss. The only difference is that under periodic you have to determine it, but under perpetual method it was already recorded the cost of goods sold. Okay, let's move on. Let us now have an illustration. Mr. Astig Segunda started a used car business called Segunda Car Trading on September 1st by investing cash of 800,000. So we know this, that the entry for this transaction would be debit, cash, and credit owner's capital. Okay? And Mr. Astig Segunda started the business operations. So he bought the following cars. So he has to have an inventory. So he bought 2000 Adventure for 100,000, 2008 Fortuner. So what will be the entry? This is perpetual method. So we will be using the inventory account. So we will debit inventory of 600,000 and credit cash of 600,000. Okay, so these are our journal entries. So class, if we are going to post this in our T account, which is the simplified representation of general ledger, debit cash of 800,000, credit owner's capital of 800,000. And the second journal entry, debit inventory of 600,000 and credit cash of 600,000. So this is how it will look like in our posting. Okay. Okay, class, let's move on. Okay, let's carry forward the our uh, general ledger, our T account. Okay. Okay, the next transaction is the selling operations. Sold Fortuner in cash for 580,000. So the entry for that would be the debit in cash of 580,000 and credit sales 580,000. Class, we are not using any more service income, but as our revenue for merchandising, we credit sales. Okay, so if we will plug this in our T account, debit cash of 580,000 and credit sales, so we will create our T account for sales and um, post the credit at 580,000. So, class, this is the uh, important thing under perpetual method. After sales, you have to make sure that you are going to record the cost of goods sold because you can do that because you only have few items and you can easily the business can easily monitor the cost of goods sold for each item. So in this case the cost of goods sold of Fortuner is 500,000. So we will debit cost of goods sold and credit inventory. That will be the entry for the cost of goods sold. Okay, so in this case, debit cost of goods sold, we will post that 500,000 and credit inventory 500,000, meaning we are crediting inventory because it's no longer available for sale. Okay, it's already sold. Okay, let's have another transaction. Paid several expenses of 60,000. So we are already uh, experience on this. So debit, expenses, credit, cash, 60,000. Okay, so let's pause this and then cash of 60,000. So after this class, we let's try to prepare a financial statement so we can prepare the trial balance and financial statements. Okay, but we will go directly prepare the financial statement, the income statement, and the statement of financial position. Okay, in doing that, we have to do the footing in our T account. Let's do the footing and getting the net balance. Okay, and here they go. Let's move on. So these are our accounts. Okay, we have just carried it forward to the next slide. And so we can now prepare this income statement under perpetual method. So this is this is our heading, okay? And our sales is how much? We have a sales of 580,000. So after sales, what do we need to have? We have to deduct our cost of goods sold. So our sales here, okay, and deduct the cost of goods sold less cost of goods sold. Our cost of goods sold is 500,000, okay? So our sales is credit and sales is a revenue and it is credit, so it is adding to our capital. So the cost of goods sold is debit, so it's actually reducing our capital. So that is just the general concept of it. Okay, so sales less cost of goods sold will give you your gross profit less expenses. Expenses here is 60,000, so that will give us a net amount of 20,000. So our net income for September 30, 2018 is 20,000. Okay, we are done with our income statement. So let's prepare our statement of financial position. So let's have our heading. So let's have our assets. Let's have our current assets, and the first current asset is cash, which is 720,000, and we have an inventory of 100,000, meaning this is still the adventure that we are going to sell. Okay, do we still have, oh, by the way, inventory is current assets, even though it is a car. Okay, it is if we are using it as in our operations or ginagamit natin yung sasakyan sa operations natin, then it is not an inventory because we don't have any intention to sell it. It will be part of non-current assets, probably under the account of vehicle or star. Okay. And then do we have non-current assets? So zero. So our total assets is 820,000. Okay, so let's us now determine our liabilities and equity. Liabilities is zero, then our equity is our owner's capital, which is 800,000. And then based on our income statement, we have an income of 20,000. So our total liabilities and equity is 820,000. Okay? Okay, class. So next is now we will have an illustration of periodic method. Okay, what is given here? Mr. Sari Sari started the Sari Sari grocery by investing 1,500,000 on September 1st, 2018. Okay, so our entry for this transaction is debit cash of 1,500,000, credit owner's capital 1,500,000. Okay, if we are going to post this in our T account or our general ledger, we have a debit in cash of 1,500,000 and credit owner's capital of 1,500,000. For our next transaction, bought canned goods and other items from different suppliers. Okay, 900,000 in cash. So we debit what? We are buying. So what is our debit under periodic method? So we are debiting purchases 900,000 and crediting cash of 900,000. So if we will plug this in our T account, we will have like this. Debit purchases of 900,000 and credit cash of 900,000. Okay? So let's move on. Let's carry forward our balances from previous slide. Okay. Okay, September 3 sold various products to customers amounting 800,000 in cash. Again, there is no difference between periodic and perpetual in recording sales. So our entry here is we receive cash of 800,000 from our sales. So we debit cash and credit sales 800,000. So let's plug this in. Cash 800,000 and let's have our T account for sales 800,000. And next is we have incurred and paid expenses of 100,000. So we debit expenses and credit cash and let's plug this in our T account. Okay. Now let's prepare financial statements. Let's prepare first our income statement. So this is what we have based on the transactions that we have just a moment ago. I mean, let's take a look of back of. So this is what we have. Okay, class. So if we are going to get the balances, okay, this is what we have, and we are going to prepare the income statement. So assuming that it's for the period ended December 31st, 2018, okay, we have our sales of 800,000. Okay, class? And we have, do we have cost of goods sold in our records? We don't have cost of goods sold. Less cost of goods sold, but there is no cost of goods sold because it's periodic method. Under periodic method, cost of goods sold is not recorded, okay? but we can determine cost of goods sold. How are we going to determine that? First is that, oh, by the way, this is our first year, so meaning we don't have any inventory beginning. So what we only have here is our purchases at 900,000. Okay? So we have purchases of 900,000. So was all this amount that we have purchased, are all of it sold? Let's take first an inventory. So in based on the inventory of Mr. Sari Sari, 240,000 out of this 900 were not sold. So meaning hindi na ibenta itong 240,000. So what we are going to do is we will deduct this inventory end of 240,000 from the 900,000. So 900 minus 240,000, that will be your cost of goods sold. So sales less cost of goods sold of 660,000, that will be your gross profit, less expenses of 100,000, that will be your net income. Okay? Okay, class, take note that in this you have purchases 900,000, but out of that 240,000 was not sold. So you have the amount that were only sold is 660,000, the cost of goods sold. Okay? And the sales for that 660,000 is 800. So you have a gross profit of 140,000. Okay, so this is what we have. So let's now prepare our statement of financial position. So our statement of financial position, we have our assets, our current assets, of course, we have our cash. Our cash is 1.3 million. And what else do we have? The amount of inventory that were not sold, okay, which is 240,000. And do we have non-current assets? We don't have. Okay, so the total of our current assets and non-current assets is 1,540,000. So that is our total assets. For our liabilities and equity, we have liabilities and zero. Okay, zero liabilities and equity. We have owner's capital beginning of 1.5 million plus our net income of 40,000. We have a total liabilities and equity of 1,540,000. So our total assets and total liabilities and equity are balanced. Okay, so class, please reserve your questions or just send me a private message or even not private message, it's better that you can send it through our group group chat so everybody will be able to understand also your question. Okay, and have a nice day, class, and stay safe. Okay, always stay safe and take all extra precautionary measures sa situation natin ngayon for COVID-19. Okay, be healthy. Okay, have a nice day.